Hey everyone, welcome to Wealth Capsule. I'm your financial expert, and listen, we have to talk about something huge that just happened in the market last Friday. It was a move that looked bad on the surface, but the smart money, well, they saw something completely different. Today we're going to break down exactly what happened, why it's such a big deal, and give you exact entry and exit points for the next 30 days of trading. Let's get right into it. Okay, so let's start with this number, $219 billion. That's how much value just vanished from the S&P 500 last Friday. Yikes, right? I mean, on the surface, it looks like a total bloodbath, a day fueled by pure fear. But here's the thing. The real story, the hidden signal that most investors completely missed, was hiding right underneath that massive number. So the big question is, was this the beginning of a crash? Or was it something else entirely? I'm here to tell you, it was a clue, a massive one. This wasn't some random panic selling. No, this was a clear, calculated pattern that Wall Street is already acting on. For anyone paying attention, this wasn't a moment to be scared. It was a moment of absolute clarity. All right, let's dive into what actually happened. To really understand this signal, we have to rewind to Friday, December 12th, and look at one specific company that had, well, a really, really strange day. Its bizarre performance is the key to this whole thing. So, it all kicked off with Broadcom, and check this out. They crushed their earnings, right? Beat expectations. They even announced a staggering $73 billion backlog for AI orders. I mean, the stock should have gone to the moon, but what happened? It tanked. It dropped over 10%. Can you believe that? The market punished them, all because it got spooked by one little thing, their future profit margins. And you know how it goes. That single piece of news from Broadcom created this huge domino effect. It sent a shockwave through the entire sector. Suddenly, everybody started selling off other chip stocks like AMD and Applied Materials, thinking the whole AI party was over. But here's the secret. The real story isn't about what was being sold, it's about where all that money went. And this is where it gets really interesting. Look at this. On the left, you see all that red ink in the tech sector. Ouch, AMD down almost 5%. Nvidia down 4%. But look over to the right. The money wasn't just disappearing from the market, no way. It was rotating. It was pouring out of tech and moving directly into financials, into payment processors like Visa and MasterCard, and even into steady healthcare companies. Now, get this. This move, this rotation, this is the most bullish signal the market has given us in 3 months. I know that sounds crazy, right? A big tech sell-off being a good thing, but it is. This shift tells us the market is gearing up for a whole new phase, and it's all being driven by one massive economic factor. Okay, next up, decoding this sector rotation and following the smart money. Let's break down the why behind all this. Once you get the logic here, you'll see exactly why certain stocks are about to have their moment in the sun, and you'll be able to spot these kinds of moves for yourself in the future. It all actually started a couple of days earlier with this guy, Fed Chair Jerome Powell. On December 10th, the Fed announced a small rate cut, but the real message, the one the smart money heard loud and clear, was that they were hitting the pause button on future cuts. His exact words were, "We're well positioned to wait and see." And that, my friends, changed everything. And what did that signal from the Fed kick off? A classic sector rotation. I mean, this is straight out of the Wall Street playbook, folks. It's simply the movement of money from one part of the market to another as big investors try to get ahead of what's coming next in the economy. So why is a pause on rate cuts such a big deal? Well, think about it like this. When rates are falling, the promise of huge profits way off in the future, like with a lot of tech stocks, looks amazing. But when rates stabilize, that future money isn't worth as much today. All of a sudden, companies that are making solid cash right now, like banks and payment processors, they become the new kings of the hill. And this isn't just a one-day thing. This stable rate recovery phase usually plays out over 4 to 6 months, and there's a pretty typical playbook for it. In the first few months, financials tend to do really well. Then you see payment companies stay strong for up to 6 months, with healthcare just chugging along, providing stability. This is the map the smart money is following right now. All right, let's get to the good stuff. Section 3, 5 stocks to buy now. This is your action plan for the next 30 days. Because look, knowing the pattern is great, but knowing exactly where to put your money, that's the real game changer. So let's look at 5 specific stocks that fit this exact profile. Okay, here it is. This is basically your treasure map for the coming month. We've got Visa, MasterCard, Abbott Labs, even a potential re-entry point for Nvidia and JP Morgan. Go ahead, pause and take a screenshot of this.
Notice we have clear entry ranges, profit targets, and, super important, stop losses. This is what a professional trading plan looks like. It's not about guessing, it's about strategy.
Let's just zoom in on our top pick here, Visa. Why is this a screaming buy right now? Well, think about it. Thanksgiving spending was up a whopping 9%. They're getting more high-spending platinum customers, up 13%. An analyst at HSBC just upgraded their price target, and frankly, the stock got unfairly sold off in all that tech panic. It is perfectly positioned to ride this wave of consumer spending. But wait, I can hear some of you thinking, isn't this risky? Is the whole AI bubble about to pop? I get it. Seeing a stock like Broadcom drop can be really scary, so let's tackle those big fears head on. First off, let's be crystal clear. Broadcom's weakness is actually Nvidia's opportunity. The problem with Broadcom was that their profit margins were getting squeezed. That just makes a company like Nvidia, the undisputed king of high-margin AI chips, look even stronger. Nvidia got dragged down in the panic, which could be a huge buying opportunity. And what about the Fed? Listen, the market doesn't crash because the Fed hits pause. It crashes when the Fed starts cutting rates unexpectedly, because that signals a recession is coming. A pause? That's the Goldilocks scenario. Not too hot, not too cold. It's the perfect, stable environment where stocks can really thrive. Okay, so let's recap. I've just given you a professional level analysis of a huge market signal and an actionable plan completely for free. We've connected the dots from the Fed all the way down to a specific set of trades. Now, the ball is in your court. So here's your mission. Number 1, you need to hit that subscribe button for Wealth Capsule right now. Seriously, do it now because our next update is all about when to sell these stocks for profit, and you cannot afford to miss that. 2, comment below with your biggest concern. And 3, share this with one person who you know is worried about their portfolio right now. Coming next Thursday, we are talking the exit strategy. We're going to get into the exact day and hour to consider selling for maximum profit. Will you be ready? So drop that comment below. I read every single one. Let's build a community that actually understands how the market works instead of just fearing it. I'll see you next Thursday.